Good morning, everybody. It's Christian from Student Education with the 4 Majors Notice Update for the 10th of December 2013. Morning, guys. Okay, 4 Majors morning, starting with Euro against US dollar on the FX Ultimate 8 template. Let's start with the daily on Euro. And what do we have? Well, clearly upside yesterday, has been upside for a while now. Clearly broken above the weekly fib, and subsequently we are seeing higher highs. The last 4 days, in fact, we've seen higher highs, so we should be looking for targets towards that monthly fib level high, which is also a weekly fib level high here, which are the ones we saw back in October of this year. All our indicators looking positive. There are one or two areas intraday, especially the 15 and 30 minutes, which aren't all that conclusive. However, you can see the long-term sentiment still favoring the upside. We have a blue arrow, blue candles. The RMO, OSMO, and the RSI are still highs, and most importantly is we have broken or breached a weekly and monthly fib level previously over the past month or so. So now a bit freer to move higher, so we should be targeting the upside. Just be aware, the higher or the closer we get to the current high, the more likely price is starting to consolidate. So you can see the candlesticks after the breakout more directive, but as we move higher, you're going to start seeing less and less momentum pushing it higher as people start to be wary that we are trading into a major level high, which is these ones we saw back in October of this year. So just apply caution if you are trading, or if you are looking to trade this. Just be aware that the higher you go, the less momentum is starting to carry now. You can quite clearly see a lot of momentum on the breakout. However, just recently we are getting upside, really nice move, pull back, move, pull back, move. Very genuine, but you can see the OSMO starting to tire, and the RSI starts to go into that. If I just change this to the 14 now, you can notice that the RSI is well overbought. So it's just telling you, heads up, just be cautious. Sterling over here, very important. Sterling, the past week or so has found resistance at the monthly fib level here at the 38.2. So it was imperative that we saw price actually breaking higher. We did get that yesterday. We had a nice bullish engulfing candle. It just scraped above the monthly fib. So now we want to see a clear daily bull candle above this level. As long as it maintains above the 38.2 now on the monthly fib, we should start looking for further upside. RSI is looking long. The OSMO indicator has died. It did die here as we traded into this consolidated range at the underside of a major support and resistance level in the shape of the monthly fib. That's going to happen, bound to happen. A lot of indecision candles, spinning tops, shooting stars, etc. And then we had this bull candle yesterday, and it was still negative. So you can see the candle that's trading above it now. You can see we start to go bright green, which is important in the RSI. The RMO is also starting to make higher histograms, which is great. RSI is still above, which is fantastic. But we do need to see a nice bullish engulfing candle. We've had on occasions where prices traded above this level, however closed lower, closed lower. So now if this is to be a genuine bullish engulfing candle, and you can see that this candle yesterday actually engulfed almost 1, 2, 3, 4, 5, 6, 7, 8 days, a full week of indecisiveness at a major support and resistance level. This is a very strong candle, but now we want to see a confirmation candle. So we want a bull candle, and that's the case. We're finding support above the monthly fib, then we can start hitting higher. And my next high is going to be my August 2011 high, which is around here. And then I have one which is the prior high of that same year, around about the April high here at 1672. So there's more than enough pips between these two levels, plus my long-term target, which is going to be my 50% fib retracement on my monthly, which is way above. But between that level and that, you're looking at a comfortable 862 pips, guys. So there's more than enough on the plate here, as long as sterling remains above the monthly fib. So here, imperative that we get a nice bullish engulfing candle to confirm the daily is now finding genuine support above the monthly fib, and then we can start to kick on to the upside. US dollar Swiss franc has been moving low. Euro has been making higher highs, so that must mean that the US dollar Swiss franc should be moving in the opposite direction. And clearly the indicator box is telling us that. We have a lot of selling, long-term sentiment, and the R squared is complementing that. And we are making lower lows. However, recently price is now traded into a prior support and resistance level low, the October lows, the late October lows, and that also is the weekly fib level at the 38.2. So consolidation of the past couple of days, everything's still looking negative, which is what we want to see. However, for this to be still continuation to the downside, this weekly 38.2 level now needs to be breached. Nice bearish engulfing candle closed lower, and then we could start looking to trade towards the next weekly fib, which is our 23.6, which in this case, between these two fib levels, you're looking in excess of 679 odd pips. So the closer she trades into the weekly fib, the less selling momentum we see, or genuine selling momentum we start to notice consolidation. You can quite clearly see the past 2 days, in fact, a lot of consolidation on the daily time frame. And there we go. If you look at the 4 hour, that really tells you there's a lot of indecision as we're heading lower. The Osmo indicator now has pulled all the way back, and you can see even price moving sideways. We're starting to see price going green. RSI is also heading into that oversold level. So there we go. It's been trading below the oversold level for quite some time now, but we have to be aware that we are trading into a weekly fib level. So we're going to be quite cautious on any of our entries, because if you are entering here, you're entering against a lot of resistance, a lot of risk, primarily because there's going to be less people trying to sell as we head into a major support and resistance level, which happens to be the 38.2 level here on our weekly. So be cautious, rather look for a nice bearish engulfing candle close lower than the weekly, and then start to look to trade with market sentiment still low, because a monthly, weekly, daily 4 hour is still looking for lows. So here, very important, got to see a genuine break lower. The other upside here would be people start to sell a lot of their shorting contracts, and people start to purchase them. We need to see a nice bullish engulfing candle, and then we could potentially look to trade back or scalp really aggressively to the price support and resistance level swing lows. US dollar Japanese yen daily, here also very important. We had a beautiful breakout, and prices rallied really aggressively over the past couple of weeks after that breakout of that wedge formation that we saw for a number of months. However, we're now heading into the weekly fib level highs, which happens to be our April level highs on this particular pair. You can see the long-term sentiment for US dollar Japanese yen is very much positive. We are seeing a lot of indecision now creeping into our smaller time frames. That's primarily as we are heading into a major support and resistance level high, which is represented in the weekly fib level. You can see the Osmo has fallen quite drastically over the past week or so, and our RSI is starting to show a bit of divergence. Price making slightly higher highs here, and the RSI is making lower lows. So that's divergence, and that's also come out of a 70%, which is overbought. So got to be very careful here, guys. If you are looking to trade this, you are going to be trading with a lot more risk attached to the upside, because we are trading into a major support and resistance level high. And you can quite clearly see, if I drop down to a 4 hour time frame, my weekly fib level is here, and you can see that price, yes, are attempting the same highs. You can quite clearly see here, but the RSI on our 4 hour has dropped drastically. Okay, so we are seeing a clear indication of divergence, and divergence, if you're seeing that on the RSI as price trades to a major support and resistance level, is confirming that we are seeing less buying sentiment and more selling contracts being taken up now because of that, which is going to be quite vigilant. The only thing that's going to actually cancel this setup or sentiment setup is a bullish engulfing candle close higher than the weekly, which is what we want to see, because then if she's trading above the April 2013 highs, that means she's going to look for higher highs, and then we can start looking towards my monthly high, which is above the weekly, which is 178 pips away. So it tells me just got to wait. Market's going to confirm to me what she wants to do. She gives me those candlesticks, and I will follow the outcome on those particular ones. Okay, that's it. Short and sweet today on the 4 majors. Please, if you are using this particular template, please back it up by sound money management rules, and you have to follow the rules of the template, guys. Very important. There are rules that govern any strategy out there in the world, and this is no different. Okay, there are rules that are required in order for you to get a genuine entry, and if and when you get them, back it up by sound money management. Once all those are in place, then pull the trigger. You've got to treat this template very mechanical. You've got to treat any of your trading very mechanical. Leave that emotional tie outside. Okay, very important. Otherwise, I can leave you with that. Please have a look to see if there's any news out today that's going to factor in any pairs that you're looking at. Very important. Got to be well aware of the fundamentals out there today. We are seeing a lot of news across the board. We had some negative figures out for the Chinese market, so expect the Asian sector crosses to be negative due to that. Australia also came out with negative figures last night on home loan month-on-month figures. We saw business confidence down a full point. And then we have today we also have French production month-to-month, sterling manufacturing production month-to-month figures coming out shortly at 9:30 GMT. This afternoon we have President Draghi speaking at 12 o'clock noon, which is important. Later this afternoon we have the GDP estimate figures for sterling. We also have job openings for the US dollar, and then later this afternoon or this evening we have the consumer sentiment for the Australian market, and then the core machine order month-on-month figures for the yen. So just be aware of those as we head into to the trading day. You've got to understand where the fundamentals lie and if it's going to be an impact on any currency pairs that you are trading. I hope you can leave you with that. Hope you have a fantastic trading day today, and I'll catch you guys first thing tomorrow morning. Until then, trade serenely.